Good afternoon, everyone. Today is July 16th, 2012. Today is Monday. I am going to go over it. Well, here, let me first show you the results. We had 16 ticks profit on Crude and 4 ticks profit on the ES. We only took 2 trades in the live trading room this morning. Both of them won. But I'll show you what else happened, what else was going on. There wasn't a lot of opportunity today, unfortunately. But let's open right up with the Crude, okay? I'll show you the trades we took. Now the Crude starts to get active a little earlier than the ES does, and the YM. It starts to get active about a half an hour before. You can see right here there was a big run up here between, say, just a little before 9 and a little after 9. All right, 9:30. While it ran up, what we look for is a bullish cross right here of the MA1 crossing over the BBC. The BBC is the green line, and the MA1 is the red and blue line. We look for that bullish cross, then we look for price to come back down, find some level of support, which is usually shown by the BBC. All right, when it hits that BBC, we check down here and see if we have some bullish divergence. That means the green line is moving away from the cycle portion of the slingshot, while the cycle portion is overbought. Okay, that's what we look for. That's what happened. The entry would have been right here on the up close at 87.17. From 87.17, it ran up to 87.32 on its initial move up. That is 15 ticks, or $150 a contract. All right. If you have not taken a free trial with us, go to www.cfrn.net/apply and take the free trial if you're interested in this sort of thing. I'll go through all the setups that happened here today on the Crude, on the ES, on the YM, and on the NQ. But go to www.cfrn.net/apply. If you are on the free trial and you've been in the free trial for a few days, you should have an email from me with a current offer in it. If you don't and you're interested in what it takes to become a partner so you can have these indicators for life and you can have 3 months in the live trading room, 3 months of weekly trading zones, 3 months of swing trades, 3 months of access to the members area and the partners meetings, send me an email, or you can just type in here partner info. But if you want to send me an email at support@cfrn.net, that's just as fine as well. Okay, so let's move forward. The next opportunity was right here. We had a bullish cross. Pulled back down, tested the BBC, gave an up close. It actually gave an up close right there, but it did it again right here. When it did it the first time, there wasn't any divergence. When it did it the second time, there was just a little tiny bit of bullish divergence down here. Okay. It was just a little tiny bit of it right there. But anyway, that was an opportunity. If you got into the long right there at 87.19, we'll call it 87.20. It ran up to 87.45, 25 ticks, $250 a contract. All right. The next one pulled back down right here, tested the BBC, gave an up close right here. This one didn't go as far, but you can see we had the same type of thing. Bullish divergence. Run up, tested the BBC, up close. The entry would have been here at 87.35. And that one moved up to 87.41, only 6 ticks. That was only $60 a contract. All right. The next one, right here, you got a bearish cross right here. The MA1 moved down below the BBC. It didn't actually hit it right here. We had some bearish divergence, and everything was looking good if it would have actually tested it there, but it didn't. And you can see now this is when the U.S. markets have opened up at 9:39. It did test it here. We had a little bit of bearish divergence going on down here. It gave a down close right there. The down close was 87.11, and that dropped down to 87.01 for 10 ticks, or $100 a contract. All right. The next one was right here. We had a bullish cross. This wasn't one because we didn't have a bar pull away from the BBC after the cross. So this wasn't one. I just drew in the divergence, but there wasn't an actual trade there. So we had to wait for it to draw back down, get a bearish cross, pull back and tested the BBC with the bearish divergence. Tested it, gave a down close, and that one, let's see, per contract, 87.03 if you got that entry, down to, well, I had a low of 87.84, but 87.85. So, 18 ticks, $180 a contract was available. If you took 8 ticks out of that and got $80 a contract, that's still nice. Right in here is where we took our first trade. We had the bullish cross right here, the test of the BBC with an up close. It drew down a little bit on us. We had some bullish divergence and it drew down about 5 ticks. And then it ran up and we took 16 ticks profit on that. Okay, 16 profit. There was another one right here we didn't fill on. We weren't fast enough. I was a little slow getting the trade on there, but you can see that one moved up nicely. It tested the BBC, gave an up close right here. The up close was at 87.08. The initial run went up to 87.27 for 19 ticks profit right there. It pulled back over here. There was a little bit of bullish divergence, but the cycle was starting to trend down on you, suggesting that it may have a deeper pullback here, so there was nothing really to do right there. Alright, now as we go through these next ones, we had bullish divergence, but it dropped right through. We had bearish divergence, but we didn't test. By the time we did test over here, we had too many closes above the BBC, so I wasn't looking to get short. Let's see, the next opportunity looks like it was right over here. We had a bullish cross, a test at the BBC with an up close, and we had bullish divergence down here. When I say divergence, I mean the green line is diverging from the cycle portion, which is the red and blue line down here. This green line right here, diverging from this red and blue line down here. Alright, you get your up close, and it moved up. It did the same thing over here. Now you see the cycle portion was in the middle, it wasn't at the top, overbought. So this one didn't have as much potential, we'll say. Alright, 87.52 was the entry. It ran up to 87.58 for 6 ticks, or 60 bucks a contract. Alright, now what you look for in these trades is for the green line to move into the cycle. Alright, once you get into the trade, you're looking for this green line to turn around and work its way back up to the cycle. That's what you should see done in every trade. That's why I was saying this one right here didn't have as much potential, because the cycle was here instead of like up here. Okay, the cycle portion of the slingshot. Everything turned around, and I missed this one on the short side. There was one right here on the short side. Okay, and down it went. Another one over here. This was I missed it because it was during the break. During the break, there were a couple of nice trades. This one flipped around and went long right there. Okay, bullish cross, tested the BBC, up close, and up it went. And right now we have a short trade that's right here. You see we have bearish divergence, bearish cross, tested the BBC with a down close. That one doesn't look so good right now, but it could still go. The market got pretty choppy right in here, you see. Alright, that was crude oil this morning. Okay, now let me cover the ES, since that's the only other place where we took a trade this morning. Okay, now right here at the open, the market was headed down. It never pulled back up and tested the BBC the whole way down until it got right here. It had already tested the weekly trading zone. These black horizontal lines are the weekly trading zones. Price had already tested that. It pulled back up here, so there was no way we were going to short that. Alright, we were waiting to see if it was going to get significantly down below the weekly trading zone, so we could do something more with it, or if it was going to move up off it, and that's what it did. Alright, so we got a bullish cross right here. When we got the bullish cross, we were just waiting for the pullback down to the BBC. Alright, we got long back here when it pulled down to the BBC, and I was looking for it to get up to this level right here. Alright, up to and through that level. Once it got up to it, it sold off it, and so at that point I moved my stop up to plus 1 point. That's where it took me out at plus 1 point. As soon as I got taken out at plus 1 point, it ran another 3 points and made 4 points total in the move. Okay, that was the only trade I took on the ES this morning. There was another one that pulled back down here. You can see I drew in these channel lines, but I did that at the end of the morning session. It's now violated the bottom level of the channel, so it looks like it's working its way back down to the weekly trading zone. Okay, that was the only trade I took on the ES this morning. Not really much more to say about that. There was one thing that happened this morning. When the market opened up, we had a pierce of a red envelope over here, and that was up here at the low of that bar was at 1349. That was suggested that price was going to drop. It was 1349.5. It suggested that price was going to drop 5 to 6 points from there. So you would expect it to be down to 1344.5, 1343 half, and you can see it got down to 1343. All right, so it had used up all that potential right there while we were in it today. Now, for those of you who were in the partners meeting last week, who saw that trade setup that I mentioned on the slingshot, the green turn it down with the brown below the sloping cycle line, it just happened here. The short would have been here at 1349.25. Okay, those of you who were not in the partners meeting, you need to be partners to get in there. So if you're interested in becoming a partner, send me an email at support@cfrn.net, and I will send you the information you need to become a partner. Just put in the title partner info or something like that. Okay, it's pretty straightforward. Let's see. That was the only trade we took on the ES this morning. Now the YM 4-tick range, I didn't take any trades on the YM, but I'll point out what's set up. All right, the very first trade of the morning was on the YM. The very first trade that set up on the morning, it was right after the open here. We had a bearish cross and a test of the BBC with a down close. Price at that time was at 670. I said, okay, well, there's the first trade. I was still setting up things on my charts at the time, so I didn't get into it. But I said it's probably going to work its way down to 650 from here, which was a weekly trading zone, and you can see it did work its way right down there. It gave a second opportunity right in here, and again, I was busy doing something and I didn't see it. I wasn't able to get into that. All right, and it worked its way down below the weekly trading zone. You see this rectangular area right here is the weekly trading zone for the YM. We had a bullish cross right here. Bars finally pulled away from the BBC over here, tested it, and gave an up close. I wasn't going to go long into the weekly trading zone. That's why I didn't take either one of these. All right, they were both going into the zone. Now, it gave another opportunity here on the short side. You see we had bullish divergence here, and now we have bearish divergence over here. But I didn't take the short for the same reason I didn't take the long, because it was going right into the weekly trading zone. That was it on the YM. The end of the morning session was over here. The cycle was headed too far down to be looking at that for a possible long trade. Okay? And that's pretty much it. That's all we had this morning on the YM. I want to show you something else on the YM, though, on the 1500 contract. Now, I was pointing this out this morning. The way that it was setting up, I said a few things about the way that it was setting up. One is that the ES and the YM were going to be in a precarious position because one was going to be showing a possible short, one was going to be showing a long, both of them the larger time frames. And when it happened, I said we'd do what we'll see how it unfolds, I think is what I said. And I ended up going long on the ES and doing nothing on the YM. But my thought this morning was when we pulled back up here on the YM to test the BBC, I said if you put a sell stop in somewhere down here around 654, somewhere around there, 656, 654, I said if you were to do that, then if it goes through the BBC, rather than just test it and bounce off it, you'll get picked up on that move down. The problem was that the weekly trading zone was right there. So you have this little space in here between the BBC and the weekly trading zone. I mean, that was the only space you had to really do any trading in. And I didn't want to trade in that space, so I didn't do anything right in there. And if you did put that order on, you got 10 ticks profit out of it, and then it turned around and it bounced off the zone and it worked its way up. And now you can see it's doing it again right here. But the way that I would do this right now, if I were going to trade it, because this one does actually have the potential, much more so than that last one did, is to put a buy stop in, like somewhere in here at 12,677, right in that area. Put a buy stop in there, and if it runs up there, if this is just a test of the BBC that ran through it, and if price is going to run back up, I would think it would get back up here to 12,704, probably 12,700. But if you put a buy stop in here at 12,675, something like that, your risk would have to be down below here. If this ends up putting in a double bottom right here, your risk would have to be below that pivot, and you would be able to take the ride up. All right. I don't know how that's going to unfold, but that's just one of the ways you could trade that larger time frame YM chart. Okay. Let's see. I got something that said something was coming and I didn't get the thing that was coming. Alright. Anyway. So I did the YM, I did the ES, now the NQ. I didn't take any trades on the NQ this morning either. Alright, but I'll show them to you. Okay, right here on the NQ, we have, well, it's 9:30. Let's see. There was nothing in here, nothing in here. Yeah, pulled it back up here. I didn't trade the NQ this morning because the ES and the YM were going right into zones. But, you know, the spots where there were entries on the NQ, right there for a short, right there for a long, right here for another long. Now, if you totally ignored everything else that was going on in the markets, these were the spots to trade. Okay, right there for a short. That one would have stopped out. All these other ones would have made some profit. This one would have stopped out. This one was okay. Right here for the short. And that's at the break. Okay. That was it on the NQ. It's unusual that we have so few trades on the 4-tick range, but let me just point out the setup is the same across all these markets. We're using the same set of indicators. You're looking at the same exact setup. We're trading, you know, right here. It's 4 different markets. But you know, if you were to apply it to the 6E or to the to the yen or anything like that, you're looking at the same setup. You're looking for the same scenario. All the stuff is going to work the same. It's all math. All the logic is the same. It's all just a function of movement. All right. That, my friends, is going to be the end of my recap, I believe. If anybody has any questions about anything, if anybody that's on trial has any questions, just type them into the box right now, and I'll be happy to answer them. Or you can send them to me at support@cfrn.net, and I'll be happy to address them through email as well, if you want. Okay? Let's see. I think that's going to be it, guys.